Right, everyone. Well, what an amazing day. We absolutely smashed our target. Geez, I mean, look, we know, let's see where we got in. We got in at the 19,620. This is where we were kind of spending a lot of time around this area. We really couldn't break through. I covered this in my last video, but we really struggled to break through. And we set a target down this area. This is roughly where the order block was. I've deleted the lines now because I want to just show you something else in a short while. And what happens, you know, we kind of was respecting the 21-day moving average. We kind of broke over it. Then we respected the 200-day moving average, came back down below, started re-respecting the 21-day moving average. And then when you're starting to see this low volume here, normally it's a big indication that there's going to be a strong move. And now we always favoured that move was going to be to the downside. Big, strong vector candle. We can know this because it's red, which means institutions and everyone else has really gone into this. And there's been some fairly decent sized purchases. We had a double stop here. Some more congestion with these two. And then we really ripped through. Fantastic, nice big volume candle. And I think it was about a 900-point move and about 45% gain on our portfolio. So fantastic news, really pleased with that. And now it's kind of thinking about what our where our next move is. So let's look. So like what we normally do, I've covered this in one of the educational sessions. If you haven't watched it yet, it's absolute gold. We cover the VRVP, why it's important. So we're just going to add this in now. So let's get straight into it. Indicators, we know the drill. VRVP on the chart. Let's set our lines of interest. Okay, so let's go with so we're looking at the peaks. Yeah, peak down here. Boom. What color do I want to make these? I want to make these. Yeah, what color? Let's see. Let's make them this pink color. Okay, next one. Peak here. Next one. Peak here. Now remember, this is the visible range, yeah? So this is just showing me where these peaks are, where the most traded volume at these price levels where the peaks are. And they're the only ones I'm interested in, because between the peaks, really, it's just well, there's not an awful lot of traded volume, which means they're the areas where you tend to see the moves come from, get past, and then go to the next line of consolidation where the bids come back in. So we're looking at one here on that peak. And what I'm doing, by the way, I'm just focusing in on these peaks here, yeah? Next one, you could probably argue is about there. Got another peak right on there. That's the biggest peak. It's where the most volume's being traded in this visible range. This one here. Let's see, got one there. One here. Trying to get that spot on. Got one here. Let's see. Got one here. Just shift it out the way. And probably I won't focus on these one up here. Okay, let's ditch the VRVP just because it's now just a bit noisy. We know now with the lines that we've drawn where the key areas are. Okay, so what am I looking for the next trade? Well, I need this to settle down a little bit, because clearly we've had a big blast. We came back up. This is currently looking at an hour chart, and now we are, in this potential area of noise. So, you can see we just come back up to the consolidated area. We've been rejected. Now the question is, are we going to come back down and retest this before a move up, or was that in actual fact the retest of this area before it's going back down again? Let's see what we say. Let's just have a quick check of the Fibonacci tool. So the local high was around here. Come back down here. Oh, okay. Look at that. It couldn't have retraced any perfect, right in the golden pocket. We always say retracements, traders love, after big moves, love to come back into this area. But we're not just going to dive in straight away and be that trader that we was when we were doing the challenge, because ultimately we get wrecked. And we are playing with 10x leverage, so plenty of safety built in, and we've had a nice profit. So we're now trading with, I can't remember, about $136, $140. We started with about 94, something like that. So we've had a nice win, and just gives us more purchasing power. Yeah. So what I'm looking to do, you've got your 21-day moving average here. We've got our 50-day moving average. We've got our 200-day moving average. We've got our monthly open here, which is always a key line. And then we've got this big descending resistance line. So I want to see consolidation occurring again before I dive into a move. Whether we consolidate around this mark here for the few candles, and if I keep seeing rejection, price rejection, then that's price rejection as in we're gonna, whether it breaks through and gets to the upside, that would invalidate that. But if we keep on spending some time here, whether it's bullish or bearish in terms of the candle, then I'm looking in the air to get back in. Why is that the case? Because then the EMAs will have had a bit of time to catch up. We'll have consolidated for a little bit, and then I could see maybe some further downward momentum. So just let's see how it plays out. I will do an update video as soon as I will do an update video as soon as I know what I'm doing. But until further ado, just a nice quick one here that I'll give you a quick update, and without that, I'll see you later. Cheers, guys.